Hello, this is Michael. I'm an options strategy instructor here at optionsplayers.com. This is part four of the price action pattern series. We've done the first three parts on low high bases, triangles, as well as bull pullbacks and bear rallies. This fourth part is about head and shoulders and its variants. In particular, the variant that we're going to be talking about is the Kazimoto. To begin with, need to read this just so everyone understands. Please screenshot it if you want to read it a little bit more in depth. But just understand that we are not an investment advisory service. We're not registered investment advisors or broker dealers, and we do not purport to tell or suggest which securities, options, or whatever that you should buy or sell for yourselves. Always check with your licensed financial advisor and your tax advisor to determine the suitability of any investment. Please understand this is educational. Um, with this education, we want to make sure everyone understands there is definitely a high degree of risk in trading. We say tongue in cheek, we like to teach people how to lose because by understanding how to lose, you also understand how to win. And the benefits and risks between the two are going to make you hopefully a profitable trader because we make more gains than we make losses. It's all about that. But there is definitely a high degree of risk in trading. No one is perfect. Not me, not you, not professional traders. Everyone that trades loses. Okay? Keep it real. Okay, so the purpose of this particular video, we're going to be talking about heads and shoulders, or head and shoulders, not the shampoo. We're going to be talking about the trading pattern. Okay, so what a head and shoulders is it is a pattern that predicts a bullish to bearish trend reversal. It is a baseline that has three peaks, where the outside two, called the left shoulder and the right shoulder, are close in height, and then the middle is higher. Okay. The neckline slope, okay, this is the baseline. This neckline right here in a head and shoulders, and this is not really understood out in the market, especially among amateurs, the neckline slope needs to be at a minimum 0 degrees. There's not really a maximum in the rules out there, but my personal style, my personal preference in necklines is I'm okay having a head and shoulders up to 30 degrees. So that neckline would kind of be like that, and then your shoulder up here. Okay, so it can be up to 30 degrees for me. Sorry. So that can be, I don't know why it does this. That can be up to 30 degrees for me. If we get above that, I'll maybe take it up to 45 degrees, but if it's beyond that, I really don't consider that as much of a head and shoulders. Okay, so really, this is kind of my rule. I don't know if you'll find that out there. And then you also have the inverse of the head and shoulders. It's called the inverse head and shoulders. Okay, so so you're going to have a different pattern like this, and the inverse can be 0 to 30 degrees. You can see that I'm sloping it actually. A certain amount here just as an example. So that could be negative 30 degrees. Okay, so that's really kind of my rule. And then you note that the left shoulder in a head and shoulders is roughly the same area as the right shoulder. Okay, so that's the inverse. So an inverse is really going to be the opposite of the head and shoulders. Is it's predicting a bearish to bullish trend reversal. Now, head and shoulders and inverse head and shoulders do exist in the middle of the chart. When I talk about a trend reversal, we could also be at a point of resistance. So this can also be a point of resistance. So head and shoulders can exist after a peak and be down here showing a reversal. It can be somewhere up in here, that it wants to reverse or it wants to reverse. But normally I get kind of excited when I see head and shoulder patterns when we're kind of down at the bottom of something or at the top of something or showing some kind of resistance or support in the past. Okay. So the trading rules for Head and Shoulders, again, found at points of resistance, can be any time frame. I'm always drawing lines in my charts showing where previous support resistance are. And really, I want to term this in a way that is kind of like the race. Okay, get ready, get set, and go. Okay, so the get ready is when you start looking and seeing a pattern on the chart. Now, there's not really a search for these things, at least to my knowledge. It's really kind of a visual. But the get ready is that I see something forming that kind of looks like potentially it could be a Head and Shoulders, and I'm able to draw some kind of neckline. Where the slope is 0 to 30 degrees, or negative 0 to negative 30 for the inverse Head and Shoulders. And then also I see the formation where you got a right shoulder equal to roughly the left shoulder where it would be. And then also I really, really like, and this is where I like adding, let's say, adding criteria that give me a higher probability. And a higher probability area for me is ideally the right shoulder peaks at a key fib level measured from the neckline to the head. Okay, I'll show you how I do that. Okay, if I see that happening, then I get set. Okay, I watch it, and I'm gonna watch for the price at or near the neckline following the right shoulder formation. Okay, and then at that point, what I'm going to do is I'm going to define where I'm wrong. Okay, because these things fail. I want to know where and if and when it's going to fail, and I need to put that line on there. I need to understand where it's going to fail. I want to define my target for taking profit, and then I also want a position size. Now, I trade these things on all asset classes, but with respects to the options, what I'm going to do is I'm going to position size to a certain percentage of my account, with the understanding that I may lose a portion of that if I'm wrong. So I need to understand how much I'm going to do. Okay. And then what I do is I set a contingent order. So that's really kind of gets set. The go is where the price breaks the neckline. Okay. The other part is I sometimes I'll actually consider, a lot of people, they'll double down if they're wrong. I don't do that, but I definitely double down if I get confirmation and things are really going to go. So I do consider adding to a trade on a confirming candle. Okay, so let me just give you an example. And this is going to be on the daily chart. It's Bitcoin, July 2021 to the present. And I do want to note very, very, very clearly, when you are dealing with price action patterns, the most important lesson is to be patient. Don't second guess things. You set your criteria on when you're supposed to enter, and don't enter before that happens. Don't second guess it. Let it confirm. Okay. So let's just look at the chart real quick for Bitcoin. I'm using TradingView. Sorry, that was my spy stuff. Okay. And I've got a couple of preset things here. I don't know if you can see this. So you need to understand the Head and Shoulders a little bit to understand the price structure, and then also start sort of seeing a visual picture. Okay. So I don't know if you see this or not. And by the way, Head and Shoulders are not always clean. Okay. They're not clean, but this one is somewhat clean. But they can definitely be messy. Now, in TradingView, you actually have a Head and Shoulders tool. Okay, so I'm just going to take that there. It forms the left shoulder. It forms the head. And now the question is whether we take that candle there or we take these candles. Now, I'm just going to take it here. Again, things are not always clean. So now the question is, do we have a right shoulder? And this is really, really shallow. Okay, it's really shallow. And but we've got kind of like a doji, what is it, dragonfly? I don't know what they call this thing, but you look at that candle, things kind of consolidated, and now we got a big candle down. So that, I'm saying, that is a pivot point up. And you note that the pivot point is the same level as the left shoulder. So now you just do that. Okay, so what that does is it forms the neckline. There's the neckline. and a head and shoulders. So we're kind of at the get ready, get set level. And what I would do in this and say, I think that is a head and shoulders. We got the right shoulder is in the level of the left shoulder. I always take a look at this point, saying, "Oh, what's the fib?" And you can see the fib actually is not really the key level. There is a minor fib level at 0.236, but that does fall within my criteria. So really, I'm kind of at this point, yeah, I'm interested. Okay, so what I'm going to do at this point, if there are options in this, I'd be throwing the options in. I'm going to look at that pivot point right down there. Normally, you'd have the break of that, but I want to just make extra sure because I tend to be a little bit more conservative, and I would set a contingent order. Let me just color that blue. That blue means contingent order for me. And I would set a contingent order to enter short or enter put if I could on this one. Okay. Now, where am I going to target? Well, I've got a couple areas. First of all, I love to take profit, partial profit along the way. And I can decide either to take partial profit at pivot points or right down here. There could be resistance, or there could be resistance down here. So normally I would say, okay, yeah, I'm gonna take a partial profit here. So I would normally take like 50% off here. So if I had if this was an option on Apple or whatever, I would take half of my puts off right down here, and then I would target another portion down here, and take off another maybe quarter, and there's also maybe another target down here. Okay, so the other way to do is you need to understand also where the target might be, and you can actually calculate a measured move on a head and shoulders, and the measured move usually is going to be this distance right here. And sorry for you Bitcoin enthusiasts, but this is what the head and shoulder is telling me. Okay, that if you break the neckline, that you're going to come down to here. Okay. And that's why that green line is there. So I would normally take half of my position off here, a quarter of my position off here, and then the final quarter right here. Every time I take a partial, I set my stop to the previous level. The entry level here, if I take half off here, I would set my stop here. So that means I guarantee that I make my money. And then if I exit a quarter here, I'm going to set my stop to here. And if we go beyond, obviously I'm going to get out right here. Okay. So now the question is, what happens? Do we trigger? Okay. Okay, we broke our neckline and we are soundly in this trade. And let's see, and I'll just show what it looks like from here. So if I had a contingent order on the options, I'd be here, and I'd be looking at an ultimate target down here. Okay. By the way, I didn't take this, so this is kind of in the past. Okay, and now we just track it. Where is the stop? Well, I would normally put the stop right about there. Okay. If I was trading, like futures or just the stock or whatever, but obviously we stack in options players, and we take our losses at a certain point. Okay, we take actually our losses at risk. Usually we take our profit at 2 times the risk. I do a little bit different on stuff like this. Okay, so where has it gone since then? Well, we hit profit one, we hit the target one. So at this point, I would be out of half of my position with my stop move to here. Okay, and now still looking at going down. Okay, so this is how it works. That's how a head and shoulders works. Okay, so and you also have the opposite of a head and shoulders, which is the inverse head and shoulders. So, and let me just make sure I don't have that here. Okay. Inverse head and shoulders. Okay, I'm going to give you the example of love. And this is actually, I think Steve put this out today, and I was actually, I already identified this in my video yesterday before Steve put it out. So it's kind of ironic that he said, "Hey, Love is doing some interesting things." So I got Love set to think back here as well. So a lot of times, I'm tracking these charts. I'm putting pivot highs and pivot lows and stuff. Um, okay, so that's really kind of more like there. And the question is do we have any kind of head and shoulders starting to form? So I don't know if you can see this or not, but left shoulder, head, right shoulder. Okay. And now the question is, do we have a right shoulder? Don't know yet. Okay. We're not going to take this up here at this point because we really only would be interested in the neckline if it happens to form. Okay. So we have time to wait. This is a patience game. But the first thing that I see is, let's see, where is it? Is that we're kind of in that area. And the fib from here to here, we have bounced on 60, almost on 61.8, but we could go further. Okay, so it's a game of patience at this point. We don't have to get into a trade here at all on this pattern. If this pattern is going to show, it's only going to show if we bounce somewhere down in here and we break this neckline, and that neckline is right there. So we're really kind of right now, we're just kind of in the get ready area. Really, we'd have to break that level to say, yes, that's a head and shoulders. And if we did break that level, we'd be looking at a measured move of roughly that much. So up into that target. And you do have a couple of targets where you could start taking profit on the way. If you get past that, it's very likely it would head back up to this pivot high. And that's actually a pretty good move because you're talking about roughly $46 all the way up to $53. That's a really good move. In an options world, you can actually make a lot of money. Is this ready yet? Absolutely not. Okay. This is very, very close to horizontal. So yes, that's an inverse head and shoulders. Okay. So that's really kind of the example of the head and shoulders and the inverse and when you take a trade. Be very clear that you take the trade on a head and shoulders on the break of the neckline. Okay. Not before. Okay. Now I'm going to show a variant where that actually, and the people they understand this less. And it's maybe will be an aha moment for you because you can also have a head and shoulders where you can take a trade earlier. Okay? I would not take a trade earlier on this, and it's a variant called a Kazimoto. Okay, so a Kazimoto is a variant on a head and shoulders where the pattern predicts also a bullish to bearish trend reversal, but there's a difference. Okay, you still have your baseline with three peaks. And your left shoulder is going to be kind of in the area of your right shoulder, and your head is higher. But you know that the more sloping up. But you know that this head and shoulders looking thing actually is sloping down. Okay. And the neckline slope actually in a Kazimoto is 0 to negative 30 degrees. And what you really have is you got a lower low and a lower high compared to the head. Okay. So a Kazimoto differs in the fact that your neckline slope is 0 to 30 degrees, 0 to negative 30 degrees. as opposed to a normal head and shoulders, which would be 0 to 30 degrees. Okay, and it's going to be inverse for the inverse Kazimoto. Okay, so the trading rules for a Kazimoto also are a little bit different. Same stuff as before. You know, your neckline slope is this, that, but you need to look at where your pivot point of the potential right shoulder is to the left shoulder. Okay, again, ideally, you should see a key level. They're not always going to be equal, but I realize the key is not at the neckline. It's actually at the formation of the right shoulder pivot point or near it. And you need to find some kind of confirmation. Okay, so you also need to define where you're wrong, define your target, position size, so on and so forth. But the entry is actually when you see the pivot point confirmed. And you enter at the end of the confirmation candle. And then what I do is I consider adding to the trade on the break of a neckline. Okay, so let me show you how this works on the Kazimoto. Please don't confuse the head and shoulders of the Kazimoto because they definitely are different and you have different profit targets. Okay, so now apologies to Steve. I'm only doing this because I traded this and I made money. As you guys know, I trade other asset classes, but the charts work the same. The pattern works the same. So I'm only going to show this as an example of what the chart looks like. Okay, and I was trading I'm sorry, I said it was KiwiCAD on the hourly on the 26th. Again, you got to be patient no matter what you're doing. But you know, in the equity market, these things are going to work exactly the same. Okay, so let me just show you that right there. Okay, so here's where we were at on the 26th, and this is actually 5 a.m. Now I was asleep at this point, but you know, when I woke up, I saw it very clearly. So if you can see this or not, there's kind of a little head and shoulders. Now, I've got pivot points and I got descending stuff going on. You know, I'm always putting those things as kind of key levels on some other things that I'm trading. But these are just kind of areas to kind of give me guidance eventually when I do get into some kind of trade. I'm not going to show you my moving averages, my indicators, anything like that. You really need to look at this from a top level picture. Okay. So we have a potential. Let's just put it here. A potential head and a right shoulder, but you note that the neckline now is sloping down, and it's kind of limit on the 30 to 45 degrees, but we're definitely sloping down in an inverse Kazimoto. So now what I'm doing is I'm looking for a right shoulder somewhere up in this level. And if I happen to see that right shoulder form with some kind of bearish type of candle, like a bearish candle would be a doji, and then I get a confirmation candle, then at that point is when I want to take the trade. But you see that the neckline is sloping down. That's a Kazimoto, potentially Kazimoto. Right shoulder needs to be somewhere in the region of here. Okay. So now at this point, I'm waiting. Okay, I got a doji. And now I have a bearish candle. That is confirmation for me. Okay, so at that point, it's actually 8 a.m. It shows 7 a.m. It's 8 a.m. The 7 a.m. candle finishes at 8 a.m. That's 8 a.m. my time. So I was waking up and I looked at that and said, aha, I've got a potential head and shoulders or a Kazimoto short. Okay, so at that point, I take my trade. Where do I set my stop? This is going to be the same as option. I'm going to set my stop either above this, because if we go above that, I'm wrong. Well, it's just the way it is. And then where am I going to set my profit target? I'm actually going to set my profit target probably on the 50% of my trade on this pivot point right there. Ultimately, I really want to get down to this level. And this is where I would take off 25% of my trade, each time moving my stop. And if it goes further than that, even great, because we have that, if it takes a while to do it and there's the neckline break, then at that point, I'd even consider adding to my trade to see if it goes down even further. Okay. So that's where I do it. Now on this one also, I remember that I actually had my stop right up here. I think it was like right on that line. Okay. So, that's what I did. Okay. So let's just look at what it does. Okay. Okay. At this point, half of my trade gets taken off. My stop gets moved to my break even for my other half. It breaks the neckline, but doesn't go all the way. Now, a quarter of my trade is taken off. So I still have a quarter of my trade on. At that point, my stop is right there. Sorry. So I move my stop up to that level. I'm happy it's going down, but still going down. That's where I get stopped out. Okay, so that's a successful trade. Okay, that's how you trade a Kazimoto. What happens after that? It doesn't matter. I'm done with the trade. Now I forget and I just move on. I look for more patterns. I kind of regret not doing anything on this because it still came down and still is going down. It's actually a very weak currency pair at this point. But I'm done. So I'm done with that trade. So 50% profit at my first level, 25% off on that level. And then I stopped out at this. So really, I've got 75% of my trade at my first take profit level, and I got a quarter of my trade at a further low. Okay, so that's a Kazimoto. Apologies, I don't think I found any in the real market. I think it actually did. I saw this as a potential. This is actually live as well. This is not a Kazimoto. It is it's actually an inverse head and shoulders. If it were a Kazimoto, that's what it would look like. Okay. Right now, we have a potential head and shoulders in formation, and if we broke the neckline, then that is potentially an opportunity. Okay, so that's how that works. So it's just another real example of, I just found that this morning. Let's see, where is it? Here it is. So I would think about taking it if we had some kind of neckline break, and just use that kind of as a target wherever it breaks. And you note that that's actually getting pretty close to that gap up here. This is on FIS. I don't even know if they have options. I probably do. But certainly that measured move goes back up to this level, and maybe you would go for the gap. But you know what? Going from 120 all the way up to 135, that would be a really nice gain. Would I take this now? Absolutely not. I wouldn't even consider it unless we broke that neckline, because it's a head and shoulders. It's not a Kazimoto. Totally different if that was more like that. Okay. If it were like that and I saw a confirming candle going up, then at that point I would take this up. But I'm not going to do that because it's definitely not one of those. Okay. So that's the difference between the head and shoulders and the Kazimoto. Hopefully this is useful to you. These are actually really good trading patterns. They're kind of in my arsenal this is more of a top level. It takes a lot more patience to do it. They do fail, so you do need to make sure your stops are in the right way. But if you like this video, please give it a thumbs up. we'll have additional price action patterns to present in the future. And please subscribe to the optionsplayers.com YouTube channel, and you'll have access to those future videos as well. Thank you very much. And if you need to email any of us instructors here at Option Players, here are emails. We need to actually add one other person. I'll do that on the next video, which is AT. Thanks much, and we will see you in the trading waves. Cheers.